Well, good evening and welcome to this live stream on the 17th of September 2024. It's Martin North here from Digital Finance Analytics. Great to have you on the show tonight. Thanks for taking some time out of your Tuesday evening. And in fact, I'll tell you that Tony Locantro, who's on tonight, is one of my most popular guests. So whenever he doesn't pop up for a month or so, I get loads of people saying, bring Tony back. So the good news is Tony's back. Just before I bring him in, let me just remind you, as I always do, that we don't provide specific financial or legal advice or property advice. This is a general conversation only. We do moderate the chat. Please play nice in the chat room, but feel free to throw your questions and comments in. Specifically, if you have questions for Tony, make sure that you throw them in the chat there. This is as at the 17th of September, as I said. If you would like to get your question answered, use it. If you use @Walk the World, that puts it in my queue, which means I don't lose it because the chat sort of rolls off the top of the page. And also I've enabled Super Chat, which means that if you'd like to make a contribution to what we're doing around here, or indeed get your question to the top of the list, you can do that via Super Chat. We do that because it helps us to cover some of the costs. We don't do this for profit. We do this because we think there's a really important conversation to be had, specifically at this time, so many uncertainties. And, what I'm trying to do here is to provide different context and perhaps help people to understand a bit better what's going on. Right, let me now bring Tony in. Tony, how are you doing? Great to see you again.
Fantastic to be back, Martin. And I'm going to reiterate that I've got no slides tonight to hide behind and no bubbles. I'm coming up to 2 years without a drink, which I'm actually proud of myself because I've just come back from a couple of mining conferences where I spoke at, and can you imagine the effort just to get a bloody water? So no slides. I'm going to let the conversation flow. I think sometimes it's good for a change. And where do you start with the slides? So much to discuss, but it's been certainly a interesting time during this quiet period. I've focused on my health and my diet, and my partner's cooking the perfect pork belly. Finally, we've nailed the recipe, so that I'm looking forward to that after the show. And hope everyone's well. I do occasionally read the comments, and I noticed that my backward swimming fish seem to attract a lot of attention. So anyway, looking forward to an informative show.
Excellent. Yeah, absolutely. And it's funny, isn't it, how some things attract a lot of comments, like your fish going backwards, but that's fine. That's just the way that fish do sometimes, right?
That's it.
Hi to Ronald as well. Great to see him on. Well, look, there's so much to talk about, but I call this show something maybe some people will say is a little surprising, insofar that, we've got the situation where markets are at all-time highs. I mean, if you look at the, let's put this up. Let's go there. We put this one up. The S&P ASX 200 just hit an all-time high again. We've got the S&P 500 in the US, all-time high. So you would think that from that perspective, there's nothing much to see. The question, of course, is, well, why is that? It's also worth, I suppose, reflecting on the fact that gold is also done extremely well. It's popping around its all-time highs as well. So if you were to think about it specifically from the point of view of what the markets are indicating and what gold is indicating, there's nothing to see here. But the question is, is that the full story? And I call this in the time of financial crisis. And the reason I think that's important is because the story is complicated. And it's really complicated, Tony, at the moment in my mind, because what we're seeing is some people experiencing very significant growth in their investments, very significant returns from their investments. But we're seeing other people really caught in the headlights of high interest rates and high debt. And I have to say, I don't know what you think, but I question the elevated levels that markets have got to. And I scratch my head a bit and think, well, hang on, how do they get there?
It's just absolutely absurd. And if you look at the PE ratio of the ASX 200, it's 21 to 22 times, where a normal average would be between about 14.8 and 17 tops. So essentially on the PE ratio, we're well overvalued, and you have to go back to 2000 to see anywhere near this absurdity on the ratio. And I look at Commonwealth Bank when it went through $100 like a dodgy Vindaloo and up to $143. And I have to laugh at the trailing PE ratio is 25 times now. And it's trading on a dividend yield of about 3.25%. So that's on trailing earnings, it's 25 times. Bank stocks traditionally 14, 15 if they're lucky. Even the great stock that can affect everyone's finances, Nvidia, is only trading on about 55 times. So this is pure money flow. This isn't a new paradigm. Didn't someone say in 1929 that stocks have reached a permanently high plateau? I think that dude's name was Fisher. And guess what? Every bubble throughout history has ended. And when you think about it, these levels are well out of the norm, and markets actually tend to correct back to the norm and then overshoot to the downside. And you only have to go back to 2022, June, and PE ratios were about 13. So the Australian market, yes, overvalued. How long can it remain overvalued? Well, that's anyone's guess, but geez, the market really, it's as vulnerable as an AFL contract or a hotel ironing board. That's the way I see it. And you know, I look at some of our stocks trading after Nvidia tanks, and I'm saying, well, someone's been forced out of a great company because this AI chip manufacturer in the States, it's getting far too much attention. And I think markets will correct. They always do. And you only have to look at the Dow 41,666 thereabouts has reached another all-time high. So the way I see it is dividend yields now look as though they'll fall below term deposits. So why would you risk 20 to 30% of your capital for 3% dividend yield in a bank when you can get 5% in a term deposit? So I see that shifting. I see one day that Telstra will break out. It just has to. And that's not through the fact that it's a great company. It's the fact that it'll be the desire for yield, and we all know that the desire for yield has wiped out a lot of people financially. So markets, yes, are totally irrational. Now, if you have a look at gold's trading now as we speak at about 2,575 in Aussie dollars, around 3,700, just off all-time highs. And I was just a keynote speaker at a gold conference, and it's the same old people there. There is no FOMO whatsoever. And in fact, if you put a chart up of junior resource companies, they've dropped 75% in 2 years, whilst the gold price is actually, can you believe, guys, it's outperformed the Perth property market 33 to 25. So there is no speculative stupidity around small mining companies, despite the record highs in gold, and silver's punched back through $30 an ounce. But interestingly, the forecasts for silver are extremely bullish, and that's my top commodity, the one that I'm betting on, so to speak. And targets, are up towards $40 on silver, due simply to Chinese demand. And one of the points made at the mining conference is that Chinese investment in Australian resource companies has dropped off a cliff. And my argument is they'd rather throw $10 million on a knockdown in a dodgy Sydney suburb for their daughter studying arts at uni. So I mean, go figure, guys.
It is very interesting, isn't it? And the article that I'll put up here, if I can just switch to it, it's there, isn't it? There we go. ASX rises to fresh record. So they talk about the record. Gold miners were well bid after bullion reset, etc., etc. Miners were among the indices' top performers. You know, all the normal names there. It's quite possible the gold price could creep up and go past 3,000 US, said Sam Berridge, who's one of the Natural Resource Trust's analysts, and is an interesting story. Now, if you want to sort of take a slightly controversial view, one of the questions I always ask Tony is it better to go to gold or to the gold miners? Because it seems to me that in some cases, maybe the gold miners will actually be a long-term better bet than gold itself.
Absolutely. And that was rammed home at the gold conference. So,
Your
lost my video.
Your video's just dropped off. Did the plug drop out? Yay.
Yeah, I thought, I wonder what the hell was going on there. No, very few technical issues. But the risk is, now this is, I'm not complaining about this. Well, it sucks. I'm coming up to 3 years in a small cap company bear market. So, if you want the definition of sandpaper to death, for those playing Locantro bingo, that's been it. And small cap stocks are prone to index risk, as I mentioned earlier, which is caused by bloody Nvidia. But I've looked at valuations of these gold companies, and a lot of them are trading at a third of what they should be. I sat through roughly 80 presentations over a few days. I've certainly got my favourite stocks that I think the major gold companies to get growth prospects would rather buy someone else's production scenario or ounces rather than risking environmental decisions driven by Dreamtime in New South Wales. And I think now we've got environmental and government risks that have, stopped producing operations going ahead, employing people. If anyone watched the Welcome to Country during the AFL match on the weekend, the guy claimed that they've been here 250,000 years, and BC, which he said before Cook. So anyway, all controversial, but if a rare frog holds up a gold mine, the world's just gone totally batshit crazy. But I've had small gold companies direct opposite of where the gold price has headed. What's going to be the next bubble? You've got to look at, we've had lithium. Lithium has had a couple of cracks, and lithium stocks have capitulated. We had stocks trading well over $2 that are now down to 5 cents. They're mothballing operations. There was a little bit of a dead cat bounce when the Chinese closed an operation, but then we had a rush into niobium. Then suddenly there's Chinese restrictions on antimony, which is used in bullets and military. And then suddenly all these companies are dusting off antimony announcements. So there's always a bubble where the speculative money will head, but it just hasn't headed towards gold and silver stocks, unfortunately. And in fact, a lot of these gold and silver companies are just coming off their all-time lows. So I think that would probably be a contrarian sector as to where to go. And the other interesting point I make is that those that drive straight EV vehicles would consider switching to a hybrid or ICE, and that brings back your platinum, your elements involved in catalytic. You know what I mean. That's what I'm saying, is that we'll go back to these more traditional cars, but I think that hybrids are probably going to do exceptionally well, which means a shift away from the the pure EVs. So, I mean, there's this belief, often mistaken, that these trends are forever. And, if you go back, that, the belief was that interest rates would never rise again in our lifetime. And all these, that's probably one of the dumbest, and that, house prices will remain elevated forever. Admittedly, they've shocked all of us, and that stemmed from the election in 2019, then COVID, then 0.1 interest rates. And now, you've combined high house prices with a rental crisis where people can't find a place to live, and they're thinking that, they should buy. But, the youth of today have a choice, and that choice is stay home with mum and dad, even if you can't tolerate them, because you just go to your room and close the door. I mean, kids of today don't understand how expensive it is to have air conditioning, to pay the bills, and to feed a family. It's insanity, Martin. And but I think I went around the block to say that gold and silver stocks are cheap.
No, you some very interesting points, which we'll pick up as we go through the conversation, because obviously there's another side to this story. But my point is, there is a lot of money sitting on the sidelines at the moment. All of the data that I see suggests that a lot of people are unsure as to what to do. And so there's money sitting on the sidelines and trying to figure out. We've got the Federal Reserve, of course, coming up with a rate cut later this week, and it'll either be 25 or 50. And the key question for me on the Federal Reserve is the rate cut, and if it's particularly if it's 50, is it because they foresee a recession ahead? Now, if in fact the US goes into recession, that means that those overvalued stocks are way overvalued, because of course that means that future earnings will be less severe, less generous, as it were, which then begs the question, is the Fed trying to sort of cut off a recession? And there are some people who are saying the US is already close to a recession. There are others saying, no, this is just a minor adjustment and they've got plenty of time. I don't quite know how to read it personally. I have a feeling that under the hood, there are still some quite significant cracks appearing in the US economy with some of the jobs data, but it's quite contradictory. In Australia, I have to say that the economy is going backwards, all but. And of course, if it wasn't for the government stoking the economy through its spending, we would be definitely in a recession. The latest forecast is a $70 billion additional government spend, which is a big number. And so you got to say that whatever happens in the US, Australia is in a very different position. We've got, of course, interest rates that weren't as high as the US, but haven't any chance of being cut anytime soon, according to the Reserve Bank. And we've got this stoush between the RBA and the Treasurer in terms of who's responsible for creating inflation in the first place. But one of the keys to understanding Australia, Tony, in my view, is reflected in this slide. This is the iron ore price, right? And this is the one in Singapore, I think, or maybe it's the US one. But anyway, it's $91.94 at the moment. You can see it's come way off. And they're now forecasting lower iron ore prices. Now, iron ore is such a critical commodity in terms of supporting the Australian economy. And of course, the demand is coming off because of China. So when I think about the US situation, recession certain or uncertain, Australian situation, it looks to me as though a recession is almost certainly likely with the iron ore price going where it's going.
Oh, we're cooked. Put a fork in it. And I know this is dragged on. I know viewers will think, well, they're just saying the same old things, but you're never going to time these events. I look at the US. There is so much risk, and I think that markets, to some extent, will factor in an interest rate cut. And unfortunately, interest rate cuts aren't good for financial markets. And I think that there'll be a correction, and it could be a prolonged bear market. And finally, you've had the S&P essentially driven by 7 companies. Admittedly, some of the broader market has rallied, But yeah, markets is going lower. In Australia, I just think we're in a precarious situation where the consumer is going to stop spending, and this JB Hi-Fi just seems to have bucked the trend. I mean, I know Harvey Norman is facing enormous headwinds, and they're slowing up. But I mean, JB Hi-Fi and the good guys who they took over, they're just smashing everyone, and that's through a combination of the service and the products they provide. So I don't get it. I can understand why things are slowing down, because all this pressure. And as far as I'm concerned, we've had this consumerism binge, and I think that's all gonna come to an end. People will realise that you don't need to buy a car with these entertainment systems. You can simply get a screen, and people will drive their cars for an extended period. We'll let our fridge run. We're not going to fall for the bullshit that's marketing, where internet fridges where you tap on it, you can see into it. I mean, it's all a load of BS, and we're being driven by online shopping. I mean, that's going to fall off a cliff. Again, I've got no shame in admitting I buy my watches off Temu. I think I can pay about $15 and I get compliments for it. I buy my step counter off Temu. Yeah, fine, it's Chinese, but I've got no shame, because I just think people will start to buy what they need, and no one's going to care about brands. I mean, I step into an elevator or see someone with one of those brown Louis Vuitton alphabet style bags, and my immediate reaction is fake. No one gives a shit anymore about all this stuff. I know luxury goods. I mean, it's the world's biggest shearing shed. So yeah, consumer stop spending. Obviously, there's been so much speculation around craft beer and breweries. To me, opening up a craft brewery, to me, is the ultimate speculation, and that bubble well and truly burst. And I know ones around Perth, they're not being frequented as much. And who wants to drink beer that they're trying to make taste like wine? My last boutique beer must have been about 15 years ago. And again, that's speculation. And then people distilling gin with gold speckles in it, for Christ's sake. I mean, again, speculation, and a lot of speculation of poison. So again, to open up a restaurant, there's been articles in Perth where some establishments make 60 cents a meal profit. Huge expense to make sweet bugger all. And again, in happier times, I'm happy to support restaurants, but a lot of them find it hard to simply serve me a piece of steak with a few rashers of bacon. So it's not good. It's not good at all. It's dragged on. I've got no doubt that a lot of families are just hanging on for grim death at the moment. And to make another point, Bullock comes out and says the jobless rate is too low. I mean, Christ, are we going to see 10% unemployment? Can you imagine the social unrest? I think we're stuffed. And I'll make one more point before I hand it over to you, Martin, that childcare workers just got a pay rise. Some of them, about $5,500 a year. That followed an increase for the aged care workers, probably some of the most underappreciated people in the employment industry. And now, can you imagine the pressure of wage inflation coming now? If a childcare worker can get a $5,500 pay rise a year, I just think there's going to be mass protests. I was a former cop, and we'd do work to rule to get an extra 2 or 3%. I mean, it's just going to happen. So we've got all that to come to look forward to. Now I'll shut up for a while.
That's fine. You're here to make the points you want to make, Tony. That's absolutely fine. And people in the chat are following along quite well. The point I wanted to sort of move to was, we're in the situation where we have some people with significant cash balances, significant investments, significant concerns about trying to protect that investments. But there's another side to the equation. And in fact, this article here, which was one that came out very recently, was talking about the rise in risky mortgage customers and how that could dampen the bank party. You made the point earlier on about the big four were driving the index higher. But essentially, there is some significant concerns about mortgage delinquencies now, albeit from a low base, they say. It's interesting, there are some different opinions about that, but one particular commentator said a big chunk of borrowers have problems. Many of them couldn't meet the serviceability test on the large amount of leverage that they have taken out. And now that serviceability test has moved higher thanks to steeper interest rates. The banks bent the rules, and official data show that big bank provided serviceability exceptions and waivers were about 9% of mortgage flows last year, more than double that of the smaller banks and double the pre-2020 levels. So there's a little bit of extend and pretend in all of this at the moment. And so this analyst suggests that there's a potential question about the confidence amongst the banks and what's going to happen. At the end of the day, valuations are stretched. There's very little allowance for bad news in current share prices. Rising mortgage stress may prompt the markets to rethink that stance. Now, you know and I know that there are significant extend and pretend circumstances inside the mortgage business of many banks. You know, we have this idea that if you've got hardship, they'll give you a holiday for a year or so, although ASIC recently issued a report suggesting that just extended the problem out by a year. We also know that quite a few people weren't totally truthful when they went to get their loans in the first place. So the pressure on other households at the moment with those high interest rates are really bearing down. And of course, incomes in real terms didn't really move much over the last few years. In fact, many people are going backwards. So we do have this other sector of the economy, those with mortgages, and I suppose those in the rental sector, who are really caught with the high cost of housing. And it's this bifurcation between those in the fortunate position of having plenty of assets and not feeling the problem, and those who actually are that worry me, because I have never seen so much contention between those two camps, because this mortgage question isn't going away, and therefore the banks again are overvalued.
No, and totally share your sentiment with that, because there's so many aspects as to what combines to make this highly risky across a number of fronts, and we often forget about the other side of mortgage lending outside the major banks. And then can you imagine the legal disputes coming with the banker mum and dad as well, when kids start reneging on their loans, and then they'll start to say, oh, well, no, it was a gift. And then we have all that coming as well. And so I guess we're delivering more good news than the Bible tonight, Martin.
Well, I'm trying to be a realist here, and that's why I said, financial crisis. What financial crisis, right? Depends where you are on this spectrum between those who have assets and are probably worrying now about how to protect those assets in an era of uncertainty. Because as we argue, those share prices are very elevated. AI blew them through the roof, and other things too. The banks are overvalued. So where do you seek shelter in the time of uncertainty? That's one reason, perhaps, why gold is where it is. Although a lot of that gold is being bought by, for example, China, who's trying to sort of buttress themselves against the dollar strategy. But you've got other people who really have nowhere to run and are very much in the middle of it. And it's fascinating to me that some of these issues are now starting to bubble up. This was a slide that I saw. Mortgage stress in New South Wales and Victoria has increased by more than 80% in the past year. That's revealed from the RBA. And interestingly, there's a lot of discussion, of course, in the Parliament at the moment about the Housing Australia Future Fund, what the Greens are going to do, et cetera, et cetera. But I want to highlight the fact that the truth remains that there is slightly more accessible construction workers in WA. They call them workable, whereas in fact in some other parts of the country not. But the mortgage pain is real. Thousands of homeowners cannot keep up with higher mortgage repayments on top of their cost of living expenses. And that's the sort of the contention that we've got. So trying to make sense of all this is very complicated because we've got a complicated environment. But a lot of it's been created, frankly, by these policies. I see you're flickering again. Have you got your main?
Yeah, I don't know.
Have you got your main? Have you got your mains power on?
Yeah.
I remember you did.
I don't know what the hell's going on. I'll just close it and then come back.
All right.
And then I don't know.
That's okay.
I don't know why it's doing that.
Okay, no worries. Well, we'll if you disappear, we'll we'll make it up.
Oh yeah. Oh, what a pain in the ass. Yeah, and I put it down. I'm going to look at the human side of a family struggling. If they don't have the energy to take out second jobs, or they don't have others to lean on, or they don't have a windfall coming, things aren't going to change for a long time. And I don't think 25 basis points is going to change that. So at some point they're going to give up.
Yeah, absolutely. Well, already I'm seeing some people who are essentially saying we've run down our savings, we've extended with the bank, so we've got a longer mortgage now over a long period of time. We're still not making it. Incomes are not going up. And I will just make this point. This is actually another slide that really shows some of the distribution of the story here in terms of what's going on with the inflation, of course, eroding real disposable income. Income tax, very, very significant for many people. Net interest, of course, being payable as well. It's not quite such a big impost, actually, as the income tax. And then, of course, on the other side, you've got labour income, which is a significant contributor, and other net income too, particularly from investments. But in real terms, a lot of households have been really going nowhere. And the problem with these average stories, Tony, is that they tend to give you an average view across the Australian landscape rather than looking at individuals. And unfortunately, individuals are in very different states of dress or undress at the moment. One of the things that I'm seeing quite often when I speak to them through my surveys is that the real pressure, which has been building for 3 or 4 years, is now beginning to come through. And you made the point earlier on about them getting extra jobs. And it's interesting that some did, but I'm also now seeing in my surveys, some people who got extra jobs are finding that the hours that they were working are being reduced. Yeah. So it's harder now to find a way out of this. And then, of course, we have...
Especially with financial pressure and how you're going to keep your family afloat. It's like the second part of a migraine headache. So you get the bad vision, and then you get this background headache. And that's what people have to live with. And this is every bloody day. And no wonder they turn to alcohol and drugs. So we've still got all of that. It's just nothing really to look forward to unless you're comfortable, unless you've planned for it. And I know that a lot out there are doing quite well. Bloody hell. Of all things to get, technical issues.
Yeah, well, that's fine.
I remember one show a few years ago, my laptop ran out of power. That was even better.
That's why I mentioned you suddenly disappeared towards the end of the show, and we discovered us with you. You hadn't got it plugged in.
And it was a $5 piece of hardware which I never knew existed. Oh, sorry, everyone.
Oh, that's fine. Well, that looks better now. So I don't know what that was.
All right, yeah, I just found it hard to focus. Anyway, now we're good now.
Okay, I was just talking about the oil price, Tony, because oil prices are down quite a lot at the moment. And in fact, I was talking to Edwin yesterday, and Edwin was saying, well, maybe the government should have gone to the election now with the oil price where it was, because that might be the only glimpse of opportunity that they may have. But it is interesting that the reasons, of course, are to do with the oversupply, particularly from the US. They're exporting dramatically, lack of demand from China. And therefore the oil price is lower, despite the conflicts in the Middle East and all those things. But what I was finding interesting was when I was talking to people in my surveys, specifically around the cost of living, the costs of the fuel, petrol, gas, whatever you want to call it, has gone off the radar. It's by no means the most considerably expensive thing that people are talking about. Everybody's talking about the cost of insurance, the costs of food, as you perhaps might expect, obviously the mortgage costs and things like that, and then electricity and gas. They are the ones that are actually really worrying people. So in other words, the cost of fuel is now not where it was in terms of expectations. And I think the insurance costs are one of the most killer costs that I'm seeing. A lot of people are actually not renewing their insurance because they can't afford to, which of course is also a risk in its own right.
Yeah, before the show, I filled up in Perth $1.54 a litre. That's the cheapest I've seen for a long time, but we have the most obvious fuel cycle in Australia. All you have to do is put petrol on a Tuesday because tomorrow it will be 45, 50 cents more expensive. And I've just made it a habit of picking up petrol on a Tuesday. And you're right, it's not widely discussed anymore, and it's come off the headlines. And again, before the show, I get emails from Spud Shed and Farmer Jack's, and I'm searching for reasonably priced protein, which is meat, or if I can get barramundi on special, because I'm looking for that quality. I'm not going grass fed because then you've got to add $30 a kilo. So I'm always seeking out specials, and I do it. That's just the way I am. But certainly you look at the cost of groceries. Again, Aldi always proves to be the cheapest, but I've never really shopped there at all. Insurance, my car insurance probably up 40%. 40%. Home and contents insurance through the roof. And then we've got the regular increases on health insurance. So I don't know, are people just going to buy a reasonably priced, age-appropriate car and just get CTP with it? Because you look at the costs of young people insuring a car, you're looking at $3 or $4 grand a year as well. So you're certainly right about that. And, no real costs I've noticed are coming down as well. Are people going to take up stream cycling where you leave Netflix, then you might join Apple to watch some shows? I know we're about to do that at the moment to watch slow horses. So we'll go back to Apple, watch a few shows, then quit Apple. Doesn't matter how much money you've got or what position you're in. Why would you just throw it away? And we're going to look back when the shit really hits the fan, Martin, and think, why did I have to have that? Why did I need that? Why did I spend all that money? Because we've just come out of a period of, as I said, 0.1 interest rates, and people were throwing money around everywhere, making stupid impulse purchases online. And we just, as I said, mentioned many times, I think the age of consumerism is heading towards its end for now. That's not saying we're going back to, immediately back to the 70s where you could survive on one income and you paid 3 to 4 times your income for shelter, and you could buy things that were cheap and you could survive. But those days are gone. And why? I mean, our lives now, why are we going to have to go through these financial struggles, which leads to domestic violence, mental health issues, and it's all to do with the prices and interest rates, and everything has just gotten out of kilter, and it's just going to be a slow process to get back to the long-term average, and then hopefully we get some respite where shelter becomes affordable, if not cheap again. And it has been, and it is a cycle, and cycles do not go forever. And these levels are certainly not permanent. Maybe more so with food. But I came up with an example recently where it's worth paying an extra $3 or $4 for a red rooster chicken over a supermarket chicken. You just can't compare them. And I think, if that's your luxury, I think it's worth splashing out for.
Yeah, well, sometimes, what you pay for is what you get, and sometimes not. That's the problem, is you need to sort of to kick the tires and work it out. But, you make a very important point that, wherever you look, the costs have risen. And, of course, the inflation effect cumulatively over the last 3 years has been dramatic on people's budgets. And, whenever people talk about, inflation's coming down, well, yeah, inflation is not rising as quickly as it was. In other words, the prices that you are paying are still going up. They're not going up just as fast. But if you look at where they were, 2 or 3 years ago, where they are now, they are significantly higher. And that's putting a lot of pressure on a lot of households across the country. And I'd like to touch specifically on Western Australia, because Western Australia is an interesting case study, right? In recent times, the home price trajectory in WA has been nuts. We're up 25% over the last year, and a lot of people coming into Western Australia, a lot of investors buying in. And one of the interesting ways of looking at this is on mortgage stress. So I have a chart here, which I'll just put up now. This is actually the mortgage stress for Western Australia. And I want to make the point that even in WA, there are significant hotspots where there are a lot of people struggling, not least in the high growth corridors, a lot of new home land packages, a lot of people who are leveraged up. Now, that's an important context for thinking about where WA. We touched on a little while ago the iron ore price, which is down. There's already been some job layoffs in WA from the resource sector. So what's your take on how WA is facing up on its trajectory over the next 2 or 3 years, and how do you see this playing into home prices in WA?
Well, again, 25% in a year, it's just simply the flow of speculative money. And in the paper recently, someone jokingly put up a sign on a for sale sign saying locals only. So again, speculators. Last time, if you look at New South Wales and Victoria, the punters ended up in Hobart, which is like a lobster pot. And then again, they went to Adelaide. Adelaide's done well. Finally, the stupid money has made its way to Perth. And I was reading an article before I came on, suburbs where you only need 50 grand for a deposit. Well, put it this way, you probably need bars and a vicious dog there. But on the flip side, you're probably close to some drug dealers. So again, they don't take into account that people don't want to live there and they don't belong there. People, just because you can buy a house in Broken Hill, which is a beautiful place, I've been there a few times, at some point you see them for 30, 50 grand, maybe a bit more, doesn't mean you go and live there. Units, people saying you need to buy units. But what's happening is some of these iron ore mines, they've been high grading. And what I mean is they've been mining their high grade ore, and now that's depleted. The price is dropping, that there are layoffs. And the first thing that someone's going to sell is probably the jet ski, which they've used a few times, or their high performance cars, which does, I guess that flows on from younger people having a huge income where there are FIFO. And as I've harped on for a while, it only takes a few people in the one suburb to sell. Real estate agents have to feed themselves. And then, there's two ugly words, and it's called price discovery. So this 25% rise, maybe some more upside, but I don't think we really want it here. unless because if you sell in this market, you've got to buy in this market. And with our vacancy rate at 0.7, where do you live? And I'm hearing stories about people now moving into share houses. It's the only chance they've got. And you have to share a house with 6 other people and you're still paying $250 a week. So it's a housing crisis. Can Perth keep going? Absolutely, because stupid money can go on longer than anything, really. But we're not hearing as much hype on interstate investors buying anywhere because it's cheap. Maybe a couple of years ago, I mentioned, Camillo Armidale being a good area for first home buyers. I mean, those suburbs have seen 40, 50% increases because they're coming off a low base. So, and we're going to have these mortgage belts where people are struggling. If you probably head north up Wanneroo Road. You look at the potential mortgage prisons by the sea. We're now building north of Alkimos. The train line keeps being extended along with the freeway. These are a lot of key start first home buyers where they are going to get hit with the high interest rates as well. So it won't take much to slow our market down. Already cracks appearing. I doubt 25%'s been added to my house in the last year. And I think I bought reasonably well. I'm within 10 kilometres of everything. And that includes a decent beach, decent shopping, a simple bus ride to the city. And again, a couple of suburbs up, if I had to buy, it's still relatively cheap. But I'm looking at the suburbs and to think that there's an opportunity for people to buy, 12 within 12 kilometres from everything, and get a property with a 5 or a 6 in front of it. So, I mean, I think a lot of the cheap stock is being snapped up around here. Nothing's lasting on the market at all. And, that's the research you do when you're walking your dog. So I just think we've come off an incredibly low base. Speculators have got nowhere else to go. I mean, what are they going to do? We're going to ramp the crap out of Darwin next. I don't know, but I think it's a speculative bubble. And I look at, they put up the national average house price at 900 grand, or let's look at the average income at 90 grand. That's 10 times. That's ridiculous on a national basis. And again, Brisbane just drives past Canberra and Melbourne like they weren't there. Admittedly, the Olympics are coming to Brisbane, but I mean, sell the fact. How Brisbane's going to compete with the Paris or LA that's coming? They've advised Brisbane to keep their own identity, not be like anything else. But Melburnians would be spewing because, hey, they've got the MCG, Marvel Stadium, Flemington, Caulfield, and a cafe lifestyle. And they'll say, well, why would people buy in Bris Vegas? So it doesn't matter what harbour you've got, what view you've got. Once speculative money hits it, it's just going to overtake. And admittedly, I have to go back 18 years, guys, when Perth was briefly more expensive than Sydney, despite the fact we don't have the Harbour Bridge, we don't have the Opera House. We stayed at Crown Barangaroo recently, only because that's where my conference was, and we got it half price. But I looked at the view, I marvelled at the view for 10, 15 minutes. Then I was completely sick of it. And in a bear market, people aren't going to care about views. It's just a marketing ploy, or close to cafes and shops. Well, duh. And then we're using, admittedly in the old days, there were good selective state schools. And then people aren't going to give a shit about a school catchment area. Why would you pay 50% more to send your kid for for one of these schools. I just think that all that marketing bullshit's going to come to an end. But I guess I don't know when this speculative frenzy is going to stop in Perth, but real house prices, let's go back, and this is with house improvements, tend to grow at 2.5% per annum. I think 25 is a bit stupid.
Yeah. Well, there's no doubt about it that we are seeing significant spikes up. But I just want to remind people, if you look at the long-term trend in WA, if you go back 20 odd years, right, there are still prices that were higher back then than they are now. So because they went all the way down, and then they went sideways, and then they're going up. And interestingly, the latest analysis shows that the default rates are highest in WA. And that's because of the previous cycle that we had, peak and then drop. And that tells us that this can take quite a few years to shake out. So, everyone was saying, well, with a mortgage cliff. No, people will hang on for quite a long period of time. It takes quite a few years for all of this to sort of grind through. And it's interesting to me that as house prices are actually peaking in the West, we've got the default rate rising in the West. And some banks actually being a bit more cautious now about what they're prepared to lend in the West as well. So all of that tells me that we are going to see some adjustments ahead. And I think the root cause of it will be the resource sector, again, pulling back. And of course, that's been the story of Western Australia for a century plus. Boom and bust. It's been the boom state, and then it's been the bust state.
Yeah, and I guess if you're a McDonald's worker working in outer Western Sydney and you want to get yourself on news.com because you've only got 25 properties, you need 28, of course you're going to buy in cheap WA suburbs. So then, you can have a story written on you. The day I see a current affairs programs where mums are pushing prams, flipping gold and silver stocks, it's time to sell. But again, the press are enthralled with people that will own $5 million worth of property, yet owe the bank 12 to 15 mil. And these people need to be admired. They need to write books. They need to sell programs. So again, it's just a massive fugazi. And I'd rather WA not be boom bust. But if people can sell the Perth market and find somewhere else cheap to buy, but that the cheap opportunities are drying up due to speculative money. And again, it's like any sector of the stock market where cheap assets stop in Australia. They tend to go to Brazil or Africa, maybe attempt to peg some ground on the moon. So again, it's just stupidity. And wrongly or rightly, I was doing a talk in Sydney and I said, my definition of a market, it's a collective of people with no fucking idea what they're doing. And that's exactly the case. And it's up to us, hopefully informed people, to benefit from these irregularities and people's stupidity. And again, you look at the Hook Tour girl. If people that don't know, I Google her, and I see her interviewed saying she gets a shock now to look at her bank account and where she's made a stupid comment about oral sex. So you just don't know where your luck's going to turn. You don't know where your luck's going to turn. And those lucky people that bought a house in the roughest suburbs in Sydney during the late 80s. I know I used to surf there. If you bought a house in Curl, rough area, Freshwater, Harbord, North Manly, rough areas, now suddenly they're blue chip. I used to be a cop around Bankstown area, blue chip. Cabramatta, blue chip. Marrickville, Albo lives there. I used to chase cars with people throwing out casino chips and white powder. Gangs. Now suddenly everything goes blue chip. Perth, you're going to have that struggle. We've always got Cottesloe, Claremont, Dalkeith, Nedlands, but try turning some of these outer suburbs into blue chip locations. You can't. You cannot. And if you got to look at how people maintain their gardens, how many rusty old boats and trailers they've got, hoarding stuff. But yeah, I think the risk now, maybe there's a little bit more upside in Perth, but as soon as some of these iron ore mines really start to struggle, lithium mines as well, it only takes a few people to lose their job and a whole area of a suburb or an entire suburb, you get your 10-15% correction. So risk certainly now to the downside. And I think relative to where we are, the price to income ratios historically in Perth are still expensive on a historical basis. And further downside pressure in the iron ore price, yeah, I don't think the super profits the gold companies are making can make up for it. So yeah, no, I don't think Perth's going to certainly perform as well as it has. And I mean, those may be thinking that Melbourne's decline, maybe they think it'll get back to being the second most expensive. I don't know. So yeah, there you go.
Very interesting. I like Otto's comment there as well. Yeah, absolutely, Tony. And look, you know, nobody quite knows how it's going to play out, but it is worth, I think, just looking over towards Melbourne and just making a bit of compare and contrast, right? So if WA is the house boom sector, Melbourne is going the other way. Prices have continued to drift lower in Melbourne. There are more listings coming on the market at the moment, more property investors trying to get out. Interestingly, they changed one of their regulations recently with regards to continuing to use gas in the home for cooking. They were going to turn it off, but they've decided not to. But you've got to say that you know, the Melbourne story is probably a leading indicator of what we're going to see more broadly. One of the factors that I see quite often in the Melbourne context, though, are people in the rental sector who are saying, oh, well, maybe I should now get out of rentals because rentals are still rising, you know, in terms of rent costs, and buy property. But what they're then doing is they're buying some of these outer suburban properties, the lemon properties, as I call them, and then they find themselves leveraged into an asset that actually is not going to go anywhere much. No. Quite often, they're actually buying ex-investment properties that have problems too. So to my mind, the Melbourne property market is a really good primer for what could happen more broadly across Australia as this sort of high pressure, high interest rate environment, which we're going to see stuck with us for some time, plays out. And I think that's a factor that people need to bear in mind. Unfortunately, though, there are still people who believe that property prices can only ever go up.
Yeah, and obviously New Zealand has proven to be the leading indicator. Which, you know, you look at areas in New Zealand, I've seen it, you know, down 20 something percent, and their economy really has led us, you know, they're the leaders now. But again, it's hard to predict where stupid money will go. And I know the period around COVID, the 0.1 interest rates have made property realists or people real about the economy look stupid for a long period. But who would have put a global pandemic on their bingo card, or Labor losing that election? Yeah, the world's, you know, things have gone crazy. God knows what's going to happen in the States. You know, someone's camping out for 12 hours on a golf course with a rifle. It's just, who knows where it's going to head. But if there's an acronym now, if you're able to, my acronym pretty much is GTFO, and you're all welcome to work that out yourselves.
little bit of homework there, folks. Now, there's another factor in all of this, which I think I just want to touch on, Tony. There were some really interesting articles this week about the Bank of Nan and Pop. I don't know whether you saw them, but it is quite an interesting story because what they're talking about is the great wealth transfer. It's interesting because this article had the housing is eating the economy. The sector's woes affect the entire economy, which is what we've been touching on. You know, the housing sector's too big, it's gobbling up everything. But they did make the point that the boomers are actually skipping their kids and giving directly to their grandchildren. And there was a piece of research that showed something like $4.9 trillion of baby boomers' wealth, and it's sort of flowing into various sectors, children, grandchildren, and what they're then doing it. Some of them are holding to invest it, some are paying off debt, some are actually spending on luxury goods, but quite a few are using it also to buy property. And again, the articles make it quite clear that the inheritance is changing the game for many families, and it's really creating a bifurcation between those who have family money and those who don't. And I actually made a show over the weekend called Look Who's Wealthy Now, because what this is telling me is that if you are in the fortunate situation where you have money in the family, and either the boomers are handing it down, or they are actually falling off the perch, and then the money comes down through inheritance. But this is a big factor, and I wonder whether this is something which people should bear in mind too, because I'm seeing it in my surveys that there is a bit of a splurge at the moment of people who are buying property and investing in other assets through that family money. But it comes back to, if you're not a family that has that family money by way of background, then you've got no chance of getting into the property market, and you've got no chance of building wealth. So once again, we've got this bifurcation between the haves and the have-nots when it comes to family wealth.
Oh, it's as we know, I think at one point you said the bank of mum and dad was the 9th biggest bank in the country.
Yeah.
And again, I can see that a lot of the boomers, so to speak, the fastest gifting to the kids will happen before they're forced into a home. And when that gifting certainly tightens up, and they're going to look about, well, what am I going to do with all this money? And the kids are under pressure. So it makes perfect sense that they'll gift it. But again, what about those that have already blown their inheritance or are in a weaker financial situation? And I still think that when things get tough, people will turn to gambling. More so, we've got the Spring Carnival coming up now, Melbourne Cup. Out of habit, I'll buy a few MSWA tickets. So the odds of winning, I think, $500,000 on the early bird was 1 in 50,000, and you're not going to get those odds playing any lottery or lotto. Plus, it goes to a good cause. So we're going to see people take more risks. Figures are showing that I think it's about 7% now. Maybe 10% aren't scanning their items properly as well. And I know that when I went in to get some bars for my partner, I bought 20 of them, and then suddenly they come over, they watch a replay of my scanning just to ensure that I didn't steal something. So again, it's just, I think it's turning into an absolute shit show. Yes, I think things have been prolonged, but there's only so much humans can take living with the severe background headache that's financial pressure, which stems to it moves to every aspect of society. And I think you're going to see a lot of parents that they want to be present with their kids. I don't think you want to be worried about money when you go to the park or are trying to spend quality time. I just think our quality of life has certainly nosedived. People say, well, look at all this technology. We're just a nation of, phone addicts now. And we're addicted to all this crap. But again, we just want to have a simple life, get back to things that matter. But unfortunately, to get there, we're going to have the mother of all economic resets. And things are slowly happened. I mentioned pay rises to the lowest paid workers. There's going to be a lot more pressure to try and get everyone in line. I just think there's a lot of pain coming. And you look at those riots in Melbourne. What they're doing to the police, the stupidity there. I just hopefully we can hold it together a little bit socially. because we don't want to see all that. We don't want this country to turn to shit. And I actually watched part of Matt Barry's speech. I think it was called "Put Another Aussie on the Barbie," and I'd advise those on here to seek that out on YouTube, because the responses to his talk were very good. And Matt spoke with no bullshit, and I think that it's just a shame that it didn't get more mainstream attention. So yeah, certainly check that out.
Yeah, I would underscore that. In fact, he quoted my stress research as part of the picture that he actually painted. And, when you actually stand back and think about all of the jigsaw puzzle of pieces, he really painted a quite concerning picture about the strategic direction, I should say, of the country. And, some really big questions. And of course, right up in the middle of it, you've got the old migration question, right? The net permanent migration and long-term arrivals still up there. And so that's the reason that we haven't got a recession is ultimately because of the fact that the migration has remained high, much higher than long term. And you can see there now it's going on for longer than the dip down. So anybody who argues that we're just making up for lost time are missing the point in terms of what happened through COVID. We got a lot of people coming into the country. And I'm quite amused, Tony, that one of the arguments now being made is we need to actually prioritize bringing migrants in with building skills so that they can build more houses for the migrants who are coming in the country. And I'm thinking, hang on a moment, that sounds a bit recursive to me.
Yeah, and who knows about the quality standards as well? But certainly, you look at the building crisis here. I don't know how much publicity it's got over east, but Niche Living, one of the heavily advertised building companies, is at a standstill, and they've got over 200 houses that are unfinished. They're going to revoke their building license. Then people could lean on insurance. Now they've been granted a stay. So we've got builders falling over here all over the place, and it's just rampant now. And you sign up, obviously there was a rush to get slabs down when these bonuses were around, and now they just don't have the materials. You've got prices of all these, everything's just gone up. A lot of companies that underquoted to get business were found out. So again, you've got to have companies surviving and thriving before you can start employing migrants with building skills.
Well, that's right. And in fact, in my SME surveys, I'm seeing a considerable, gloom spreading amongst particularly smaller businesses who are now being hit over the head from the ATO for, taxes that they have to pay. Their costs of production are actually continuing to go up. The ability to be able to pass those on in terms of higher costs to consumers or to their customers are actually under pressure. The building construction sector, definitely the lead area, more than 3,000 firms gone pop. And unfortunately, what that means is that a lot of those small businesses actually own property and quite often have got that property to support the business. So, no surprise then we're starting to see some of those defaults coming through from the SME sector. For me, that's the bellwether. And, the other angle on this, of course, if you look at the profits of big corporates, they've continued to track higher and much higher relative to the incomes that people have actually been able to generate from what they're doing. So we've got a society that's sort of tilted towards the big end of town and large corporates. Large corporates, of course, tend to have their own agendas. And also, if you're in the construction sector, you're looking for more government handouts now to be able to help cover the costs of building, which I think is just pretty remarkable. So you can see that it's a bit nuts, really, what's going on here. But the most nutty thing I want to turn to in sort of the final segment, Tony, is the legislation that came out last week. This is to do with the misinformation discussion. I'm not sure whether you've come across it, but it is worth just looking at it briefly. This is actually the meaning of serious harm, right? And basically, imminent harm to the Australian economy, including harm to public confidence in the banking system or financial markets. So if this bill gets up and it's likely to, it means that it's going to be much harder to have the sorts of conversations that we've had today, because what that means is that the large social media companies will effectively be detuning their algorithms so that anything that is contentious will be detuned. I actually wrote a post and put up the other day called "Controlled Shut Up, Say Nothing, Obey," because what this does in my mind is it reduces the ability for us to have an open conversation about the things we've been talking about this evening. And specifically, of course, truth is now being defined by the government. Oh, or if you're at a university, you're also allowed to say what you think. But beyond that, basically, shut up, don't have an opinion.
Oh, yeah, WTF. All right, well, that's the end of my career then. But yeah, what can you do? And I just had a flashback to The Big Short, where Steve Carell says everyone's walking around like they're in an Enya video, and that's exactly what's happening. That's exactly what's happening, and that I guess that sums it up. We're delusional. We're led to believe that things are going to stay these prices forever, that everything will be okay, that the government will bail us out. Look through history. No one's getting a bailout. No one's, apart from big corporations. And again, apt topic. Yeah, financial crisis. It's in slow motion though. It's in slow motion, and I think you got to treat every family's balance sheet as a company. There's lots of pressures. I know a lot of a fair chunk of the population aren't doing too badly, but again, they're going to be affected when there's higher levels of crime, when they're paying more for insurance, when they're scared to walk out at night, when you got to look at a lot of domestic disputes. They don't discriminate with how much money you've got. Doesn't matter if you're loaded. There's still violence, intimidation, and unfortunately murders. So none of this discriminates. And I look back at that interview with James Packer, and you look at his life, all his pressure, all that money, those yachts, the buildings, the casinos, Mariah Carey's rack. It did not bring him any happiness at all, because he's been through mental issues. He's suffering mental health issues, and physically he wasn't looking his best. If you saw him again in the Lachlan Murdoch on Australian Story, that he looked a lot better then. But he's saying, look, I'd rather be rich than poor to some extent. But again, it just doesn't discriminate, and we can all have bad luck in life. That's why you got to focus on your mental and physical health. And whilst I've had the toughest 3 years of my career, my attention's focused to trying to, my mum's in a dementia ward close by, and I visited her a few days ago, and I can tell you what, I just don't want to end up there. So I've got to do everything possible to stay out of that, to remain mentally alert and mobile for as long as I can. And I can tell you, all the bullshit we've been fed on diets and drugs and all that, I'm pretty much doing the complete opposite of what we're all told. And that's it. And I've never been fitter. I found a doctor that agrees with me. He told me that I can have more than one egg a day. I don't have to cut the fat off chicken. And my, I don't know, research it, guys. Research HDL relative to triglycerides. Don't believe all the crap. And if you're worried about having a heart attack, get a CAC done. But stay healthy, because a healthy person has millions of wishes. A sick person only has one.
Yeah, very good point, Tony. In fact, we made a show some time ago specifically on your transformation, which is remarkable and very interesting. We got a lot of coverage for that, and a lot of people were saying, "Wow, this is important." And it's worth just as an aside highlighting the big pharma story, because the thing that's going on at the moment, particularly in the US, of course, there are a lot of overweight people there. We've now got Big Pharma effectively selling weight-reducing drugs to those very people that have been blown up by the high-fat, high-sugar, et cetera, diets that people have actually been on.
Yeah.
And the thing that I always come back to is you got to understand what the true agendas are here, right? Big Pharma isn't out there just to make your life better. Big Pharma is out there to make money, a lot of money.
Well, yeah, that's right. Move the goalposts, change the levels. Bang, take a friggin' statin. I mean, I could go on about this for days, and no doubt with that new bill, if that bill gets through, then this program's going nowhere.
Oh, well, that's right. Logan said contrarian will work. Yeah. Look, the fact is, I think it's important to question. And one of the things we try to do here on the show is to put some information on the table, kick it around a bit, and try and highlight the fact that maybe some of the things that people assume to be the case aren't necessarily the case, and that's always a good experience. Remembering that everybody who is saying stuff has a particular point of view. We have a particular point of view, but what we try to do is to perhaps be a little bit different from some of the mainstream in terms of how to think about it. So as we come to the end of the show, Tony, last quick question. If you're somebody with some financial assets behind you, what's the right strategy at the moment to sort of try and protect what you have inside this environment where effectively markets are overvalued, there's a lot of uncertainty, rates are probably going to stay high in Australia, maybe come down elsewhere. And the other side of it, if you're somebody who's got this huge pressure on you in terms of the financial pressures, the mortgage pressures and all of those things, how do you tackle that? So let's look at those two groups and maybe get some reflections on if you're in the first or the second pool, what are the things to think about?
Well, the majority are scared of taking risks. Why, as I mentioned on Commonwealth Bank, with that dividend, it's backwards PE. Take 5% in a term deposit. And if you've got too much money, spread your risk. But look at if a bank owns a bank. So separate it, but you're going to have to do a bit of research. I pity that poor woman in Brisbane that won 100 mil. Good luck trying to keep that safe. Those struggling, either find someone to live with, think that living with your parents is kind of cool because generally the parents would probably like to have you there. Look at alternatives. You're going to have to sacrifice, your kids having their own room, just for getting change. You mightn't have a backyard where you could roll a cricket pitch. But generally, if you're really struggling and you're exhausted most of your avenues, GTFO. Because again, you can sell some of these assets at in a ridiculous market, which admittedly keeps going, but we're closer to the top. The top's not far off. And again, I've had 3 years of a bear market in my sector. I couldn't imagine 3 years having a property bear market because that's certainly going to happen. And my 3 S's now are sex, steak, and sparkling water. There you go, the 3 S's, which sparks joy. That's what you're going to do. Just freaking be happy. This whole world is turning into a Benny Hill skit. It's just, WTF, what the hell are we thinking? Just don't break the law, be nice to people. That's it. Just get on with shit. You've got a once in a lifetime opportunity to cash in a winning lotto ticket if you can just sacrifice, there's opportunities around and it's a seller's market and it's the window's still open, but who'd have thought that the window would be this much open for people to take a financial windfall due to stupidity and irrational exuberance. So yeah, that's my closing argument.
No, absolutely right. And it's just worth reflecting on the fact the global debt bomb continues to tick bigger and bigger. They're going to sort of probably, Australian debts continue to rise, both public debt and private debt. We saw significant upticks there. The US is in the same position, China. So around the world, we've got more and more of the debt. So underpinning all of this stupidity and uncertainty is this debt story, which can't really be unpicked. And what that basically means is that we're going to continue to muddle along in this mode. But I think for individuals, it's very important to get informed and to think carefully about, where things are and where things might play out. And Tony, I think some of the points you've made tonight are really, really important. It's about looking after your own health and those sorts of things. That's really, really important. And then also being a little cautious and careful, because I don't think we can see the stock markets continuing to shoot higher. They're more likely to perhaps go sideways. September, October tends to be a wobbly time anyway. So watch this space when the Fed does. And then the other point, which is I want to come back to, you can go through periods when even with all your best endeavors, you're still in the middle of a bear market. So these bear markets can go on a bit, can't they?
Oh yeah, and I'm in one. I'd love a turnaround, but it's just hard to stomach when your two commodities you're backing, gold and silver. Gold is near a record high. Silver's got a bit of work to do, and none of this makes any sense. And you just got to move on, deal with it, and fight. But fighting mentally and financially is hard work. And it's just detracting from our lives, unfortunately. So, I saw that. That's why the orchestra stayed on the Titanic. What a great comment. Oh, I love this community.
Yeah, no, it's
I love
good.
it. I always go back and read the comments and,
Well, Tony, I want to say thank you very much for spending some time with us this evening and going through some really, really important issues, and always value your perspectives, as indeed we know that the community does too. So, I've put details of your website in the comments, and also I showed it on screen a second ago. So if you want to find out more about Tony, go there and do that. And I'll look forward to picking up the conversation down the track, as we always do from time to time. Always plenty to talk about. And I hope that your evening meal is as good as you expect it. I'm sure it will be.
Yeah, perfectly cooked pork belly. And the mother-in-law gets here in 6 hours from Hungary, and I think she's just about to dodge the floods, which, anyway.
Excellent.
Thanks, everyone. Thanks for having me, Martin. I'm always available, so just reach out via email, and gladly come on the show with no technical issues next time.
we got there. And thanks very much, Tony. I'm going to take you offline now, and I'm going to close the show.
Thank you.
Take care. There you go, folks. Hope you enjoyed that. Insightful as always from Tony, and we played a bit of Locantro bingo on the way through, which is great too. Now next week I've got a special show with Edwin, and we're going to go through some of the specific examples of recent property inspections and show you some of the faults and defects that we've seen, and try and work out from there what is the quality of construction in Australia, what are the things to look out for if you're buying property, and we'll show you some videos and things like that. Following week, Damien Klassen will be on with his market update. Anyway, thanks very much for spending some time with us this evening. The dogs are still in their baskets. They have hardly moved all that time, so that's good. And they'll be ready for the next walk very soon too. So I'll go and give them that walk soon. But anyway, I want to say thank you very much for spending some time with us this evening. Hope you found that useful. Please like and share. Check out our other recorded shows we publish every day, and the live shows are done on Tuesday evening. And check in for next week's live show. This is Martin North from Digital Finance Analytics, signing off. We'll see you next time. Take care. Bye.